What is going on, guys? I am Chase, and welcome back to Intelligent Money Investing. Today, since I've been getting asked so much, I'm going to be talking about a few ETFs that pay out monthly dividends that I like, that I have in my portfolio, and that I think are going to perform pretty well going forward. And before we get into that, I want to ask you guys to please smash that like button on this video. Let's try and hit 25 likes if we could. We've been absolutely crushing it with the support lately. And I want to welcome all the new subscribers. They've just been flooding in, so I want to welcome you guys to the channel. Hopefully you guys enjoy the content and stick around. So this has been out of popular request. We all like to talk about passive income and kind of building towards like the dream of being able to sustain ourselves by just owning stocks and stuff like that. But in order to do that, it's going to be a little bit harder to do that if you're just getting paid quarterly through your stocks, your ETFs, through basically your holdings. And it'd be nice to be able to get paid kind of like how real estate people get paid, like on a monthly basis, rather than that quarterly, like which is basically the normal for stocks. Like most of the blue chip companies are going to pay out quarterly. So this is a few ETFs that pay out monthly, and let's get into them right now. So the first one we're going to be talking about is DIA, and that's going to be the Dow Jones Industrial Average ETF by SPDR. So this one basically is just like VOO, but for the Dow. It tracks the Dow 30 biggest companies in the United States, and let's look at its top holdings. Top holdings are going to be Boeing, Goldman Sachs, 3M Co., United Health Group, the Home Depot, Apple, McDonald's, IBM, Caterpillar, and Travelers Company. So these are some very good companies, very well established, very, very strong companies that aren't really going anywhere. You don't have to worry about these companies going out of business anytime soon for the most part. And if they do, you are very diversified from having a lot of different companies in there, and it does pay out monthly, which is a big benefit. And another great thing about DIA is that although its expense ratio, like if you guys remember when I talk about VOO, I talk about how it has one of the lowest expense ratios at 0.04%. But you got to remember that with the expense ratio, exactly what that is what the servicing fee, so the amount of money they take out from the fund each year in order to, as basically a charge for putting it on, like servicing it. So when they're paying out monthly dividends, they have to pay out 12 times a year rather than just 4. So it's obviously going to be a little bit more expensive and a lot more logistical work. So you are going to be experiencing a little bit higher expense ratios. So when that happens, you're pretty much just par for the course when you are going for monthly dividend ETFs, and 0.15% is about the lowest I could find for equities for basically a stock ETF. There is a lot of bond funds that pay out monthly that have lower expense ratios, but that's really not what we're focusing on in this video. We're kind of more talking about stock ETFs that are going to kind of grow in the long run. So the number 2 one we're going to talk about is going to be SPHD. Now this is the PowerShares S&P 500 High Dividend Low Volatility ETF. I do own about 23 shares of this in my portfolio. Right now it's a $39.34 price, so this is a great beginner ETF. I believe it was the first one I bought, but just because of that low cost, that you don't have to make a huge initial investment to get into it, and I think it's at a pretty good price right now. In order to get in, I believe my average cost is about $40 on this, so I'm a little bit down. But if you guys think about the dividends that I've been getting every single month that I've owned it, I am still up on this position. So total return I'm up, but equity return I am down as of now. So this one's got an expense ratio of 0.30%, and while that is that is twice as high as DIA, this one's a little more specific and a little more niche specific. It kind of has a different objective than DIA. DIA just contains the top 30, or like the Dow stocks, but SPHD screens for the least volatile of the highest yielders in the S&P 500. So it's a more unique ETF, and you're not going to see much else like it on the market. Its top holdings are HCP Inc., Iron Mountain, First Energy Corp., Welltower Inc., AT&T, Southern Co., Ventus Inc., AES Corp., PPL Corp., Ford Motor. So these are really high yielders, and it is very REIT heavy. So just keep that in mind when you're getting into this. And we know REITs have been struggling a little bit lately with the higher interest rates rising. So that's just something to keep in mind before you get into SPHD. But I do think it's a good choice, and it's a good way to diversify your portfolio, especially if you aren't very real estate based. I am very real estate based, so I probably won't be adding this position very much going forward. A good alternative to this one, if you're looking for high dividend yield yield is going to be, and low volatility is going to be VYM, because it has a similar objective. It does pay out quarterly, but it excludes REITs from it, and it's put on by Vanguard, so it only has a 0.08% expense ratio. So that's pretty nice. Oh, the last one we're going to be talking about is OUSA. So this is the Kevin O'Leary ETF that I've talked about in the past. Over the last 6 months, it is actually down. Year to date, it's down, but along with the whole market, if we look at its max, it's only been around since 2015. But if we go off of its top holdings, let's look at those. Johnson & Johnson, Intel Corp, ExxonMobil Corp, AT&T, Procter & Gamble, Home Depot, Pfizer, Cisco Systems, Boeing, and Philip Morris. So these are very, very quality stocks, and these are pretty much handpicked by Kevin O'Leary as like quality dividend picks that are low volatility. So yeah, I think that this is a solid position. My one hesitation on this one, though, is that expense ratio. So this is the top expense ratio. We kind of go up in order in these at 0.48%. And I think this is a little bit high to be paying for an ETF, even though it does pay out that monthly dividend. And the monthly dividends are really nice, but 0.5% a year essentially means, let's say you invest $1,000 in this ETF, then you're going to be paying $5 a year as a servicing fee, and that's going to really cut into a lot of your profits when you're holding this for a long time. So that's what I've got for you guys today. I hope you guys have enjoyed learning a little bit more about these monthly dividend ETFs. I definitely plan to make a monthly dividend stock list coming up soon. I really think it's important for people to think about their monthly income, and that's kind of how I like to think about my income as a whole. Like, I kind of divide my quarterly dividends by 3, just because I want to get a basis on what I'm spending every month, and like most expenses kind of are charted out by month, not by quarter. So it's a little bit weird when you're taking your income from dividends by quarter rather than just by month. If you guys understand what I mean, I'm more than happy to answer any questions you guys have down in the description, or not down in the description, down in that comment section. I read and respond to pretty much every comment, so leave them down there. Remember to hit that like button, and if you haven't subscribed yet, definitely consider subscribing. If you don't like the channel after a few more videos, go ahead, unsubscribe. I won't be offended. It's just worth giving it a try, and I'd love to see you guys in the next video. Thanks for watching.